Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We've got like 100 earnings reports to talk about. We'll try to cover as many of them as we can, from Google to Boeing to GE to Spotify to Ford to AMD. So yeah, just like 100 earnings reports that we'd like to discuss. So we try to get to as many of those as we possibly can in the next hour. We also have an 8:30 number, GDP. Don't forget about that. Our guest today is Patrick Haan. He's the head of petroleum analysis at gasbuddy.com. He will join us at 8:35 to break down the oil markets for us. In the meantime, Joel, give us a quick recap on what happened overnight.
Good morning, Spencer. We're trading up 15 handles at 28.82 and a quarter. Little dip off the pre-market or off the close, went to 28.60.75. Excuse me. And then we caught a bid that just would not last until we got over 2,900. 29.05 is your pre-market high. There's your target on the upside. You have crude trading in the green by $1.22 at 18.82. Gold in the green as well by $1.50 at 1,723.70. Silver up by 16 cents at 15.49. Bitcoin clears 8,000, up $465 at 8,245. Let's bring in the master of buy the dip. People were predicting you were buying the dip yesterday in last night's session. Dennis, is that true?
I did buy some dips. I added UPS. It was the only one I did add. I thought about it and I was like, I don't know if I really love this stock. And I was like, okay, I'll add a little bit. So I did like a half size position in UPS. That was the only thing I put in the long-term portfolio. But from a trading perspective, yes, buying the dip. I mean, it gave you an opportunity. Google gave you just a fantastic opportunity yesterday. I mean, we talked about buying dips, and Google falls 65 points before its earnings report. Immediately, you're getting it all back on this earnings report. Obviously, I already own Google, so I wasn't going to buy more for my investment portfolio. It's a stock that I've held for, I think I've been in it 7 years. So I've been in Google a long time. I think I'm up like 400% in it or 500%, something crazy. So I'm sticking with my long-term Google. I'm averaging from about $250, so it's $13.20. I'm sticking with Google. But I mean, this is what you got to do. You got to find companies that you like, and when they dip on the earnings, when you get in. But this obviously was a different case. It dipped ahead of the earnings, so it gave you a shot ahead of it. Obviously, people speculating that the advertising revenue was going to be a disaster. It wasn't a disaster. And now, if you look at Google, off to the races. Thoughts here, or give us the numbers here, Spencer. Spencer?
Oh, I'm on mute. Sorry about that.
Look, he never does that. Has he ever done that before? Me and Joel do it every other day. Has Spencer ever done that before?
I have once or twice. I muted myself.
Holy, he's consistently good. Like Joel does it every day. I do it once a week. Spencer does it once a year.
Well, the thing is, I have a mute button on my microphone and a mute button on the Zoom, and I muted myself both twice by mistake. So anyway, with Google, it's about the numbers, but also it's about what they said on the conference call. Because as soon as they said some things on the call, the stock rallied. So the numbers for Google, the Q1 EPS $9.87 versus a $10.33 estimate. So they missed that. I don't know how comparable that really is. The sales beat 41.1 versus 40.3 billion dollars. But on the call, they said that March may have been the worst of it, and they said that based on their estimates, as far as search is concerned, that April is not going to be nearly as bad as March was. And as soon as they said that, the stock rallied.
Wow. So looking here, Google, and I'm going to hit on stocks, so lose my train of thought. But I mean, we take off
about it. Yeah,
above the 1,300.
There you
go.
go.
I would still say 1,300 is very important. What do you think, Joel? I mean, you're above it in the after hour session. You're above it in the pre-market session. Let's see what it does in the regular session, because 1300 was major resistance. Above that, it looks good. Again, though, I'm just going to say, if you're buying the rip yesterday, if you're buying the rip in Google today, you're doing it backwards. The buying opportunity in Google was yesterday before the number, if you had the guts to take it through. This is the way, buying the dips and selling the rips, not buying the rips and selling the dips. So, people were saying, oh, you had a bullish rant yesterday and the market went down. What did I specifically say yesterday? This is not the time. I'm saying I still think we could be going to 3,000, but I'm not buying the market when it's ripping up 300, 400 Dow points. I'm buying it when it's dipping. Opportunity was yesterday after 10:30, 11 o'clock when we started to dip significantly. If you had your shopping list ready, you could have did a little bit of shopping yesterday, and Google would have been a good candidate, although I wouldn't probably have had the guts to go through it. So congratulations to whoever did buy it yesterday. Obviously, some people bought it yesterday because they're immediately rewarded.
I couldn't agree with you more on this. That 1300, I talked about it yesterday on the show. It really dipped off the close. It dipped late. Well, it was kind of a steady sell-off all day. So they got it down there, and 1300 was a line in the sand. I'm looking at the GOOG without the L. So boom, you hit a pre-market. You need continuation here. I would not buy this with my worst enemy's money here. Your high is 1344.90. I would use that as a target on the upside. I think the longer it takes to get over that level, bigger chance you roll over today. Closing above 1300 is really important. Old resistance should be new support. Before we move on to our next stock, Dennis, I got a call this morning, and from a buddy of mine that was on the show. It's a trade alert. It's not coming from me, but my buddy Paul that was on the show, not last week, but the week before.
Was he the oil guy?
Yes.
Yeah.
He got a pop-up from our show yesterday.
Okay.
And Spencer entitled it "Buy Everything But Oil." And he heard your rant, and he is now flipped to long crude. He is super bullish. He listened to our show, and he's making a total contrarian call. And he is saying,
did I say I was, what did I don't remember what I even said on
well,
crude.
we were being kind of facetious. Maybe it was more me. We were being kind of, everything was up except for crude oil.
Oh.
And so we were poo-pooing it, but he likes to make, so he is, I wish he would have called me
yesterday. We gotta watch
yesterday.
these titles of the shows, because I don't know if I was saying buy everything yesterday. I think I specifically said don't. I said buy the dip if we get a dip. So I would have been buying like 11 o'clock.
It was meant to be a little facetious.
Okay. Anyways, it's fine. I mean, obviously, make contrarian calls. People are going to be right. People are going to be wrong. I did have a bullish rant yesterday. I had a bullish rant the day before there too, and the market did fall yesterday.
No, he wasn't talking about your market call. It was
he's talking about the oil.
Yes.
I mean, I still hate oil stocks. Long term, I hate oil stocks. Short term, these things are getting hot here. I mean, there was what the tell is on the oil stocks themselves? When oil continues to go down, yet the oil stocks are rallying when they go down. Now you get a little rally in oil today, and oil stocks are ripping higher. So they don't go down when oil's going down, and they rip higher when oil's going up. That's pretty good tell that, hey, some of these things are just short-term oversold. Does that mean a lot of these oil companies aren't going out of business? No, I think a lot of them are still going out of business. I think there's still a lot of problems there. But, we've said Chevron, best in breed. Look at where Chevron has come back from. I mean, now it's kind of hard, $91, oil's in the gutter. From a logical perspective, I don't know why you'd want to own it at $91 when it was 51, and oil, is now significantly lower than where it was. So, logic says I don't want to own any of these oil stocks, but the trend is your friend right now, and the oil stocks are hot. So you can trade anything. You can absolutely hate a sector, but sometimes you got to go long it, because that's what the trend is showing you, and that's what the trade is showing you. And their oil stocks are hot. I think the easy money has kind of been made on the oil rally here now. I feel like today might be one of those days where they just go, oh, we got to buy oil. Maybe we get a little bit capitulation, higher move here. But, XOP's had a pretty good move. And in 1 month, we started the month at $30. We're at $50. So you're talking about the index of oil, oil and gas exploration, going from 30 to 60, so 20. So it's up 66% in a month. So now if you're buying it, it's not going to be as easy of a money as if you're buying at the end of April or at the beginning of April. So I think your buddy Paul, if he's just buying now, could be a little bit late to the party. But again, the trend is your friend. Just don't get stuck
Right.
holding the hot potato. It could go for a while. There's room to XOP to 60. It could. But I think it's also got room to the downside here now too. So it's more coin flip area here now as
It's
opposed
tough.
to I want to load up.
I'm looking at both those charts, Exxon and Chevron, and they kind of, I don't know if he's listening today, they kind of look like Robinhood charts, though, where they've had a move, they've had a rally up, they've had a consolidation. And, I don't know how many times I'd say, okay, it's at resistance, it's going down, and these things break out here. So I think it's kind of trade where, if you are going for the breakout here, this is the highest level that it has reached since both of these stocks, since making their March low. So it's a kind of trade where, okay, let's say I'm going to get crazy at like 91, even above yesterday's high. It's not a trade where I'm going to give it to like 83 or 84. It would be something where, like maybe 88. Like if this is a real breakout, this is not going back down to 88 anytime soon. That's the way I look at it, unless the market totally rolls over. So that's the way I look at it. I mean, I'm not going to chase it here up $1.55, but I mean, I think for your traditional, chart, chart traders and stuff, this
Breaking out.
break it out. What do you do when stocks break
There's
out?
room to 100 on Chevron.
You heard it here. Yeah, I agree.
There is room to 100 on Chevron. I wouldn't want to be short it.
Nope.
But I'm not sure I'm coming in and buying the oil stocks now. I feel like the easy money on the oil long has happened. Obviously, and hindsight 2020 capital, third week of March was when the low was in, or the second week of March was when the low was made on everything.
Yep.
So now you look at Chevron, it's up 80% from those lows, and now only sitting 25-30% off from the highs in a market where oil is decimated. So but again, the market is so completely disconnected with fundamentals. I mean, that's why I said take your fundamental hat and throw it in the garbage for a few weeks, because this market doesn't care about anything, it seems like, from a fundamental basis and logical perspective. I mean, we've talked about all the worries, a lot over the course of it, but it's hard. You can't fight the tape on this market here right now. You just gotta, again, I'm just gonna say, if you're coming in buying here this morning, I don't know if I'd be doing that on all these stocks. I mean, you're buying the rip. The rip was what I mean when the stocks are going higher. Dip, and when they rip higher.
Correct.
So we just say it that way. So, but basically selling the rally. I sell rallies and I buy dips. So if you're coming in today and you're buying your stocks now, you're doing it backwards. Yesterday, all day, stocks were down. If you want to buy stocks, that was an opportunity. Now they're trading up again. So as a trader, I would not be buying here when the S&P is ripping this morning. I might come back in. There's people who got spooked yesterday, so you might have some opportunities. Let's keep doing the earnings parade.
Real quickly though, can we just talk about the rotation, which is being a little bit reversed today?
Yeah.
Mitch wanted us to talk about it. Big investors switching to consumer cyclical stocks. The tech stocks were weak, but that trend's reversing today. Is this going to be a true rotation?
I think you're just seeing the dash for yesterday. You saw the dash for trash. You're seeing it continue to a certain extent here today. I'd be very cautious on a stock like Amazon here. Amazon, ugly candle yesterday. It's ripping up with Google because we know people trade the whole FANG thing together. But Amazon has been moving counter to the market. And if the market holds up and if Google holds up, I would not be surprised if Amazon rolls over. So out of all the FANG stocks you're buying here today, and Facebook is ripping higher, and Netflix is trading slightly up, but I would be careful on Netflix and I would be careful on Amazon because they have been moving opposite to the market. To a certain extent. Yesterday wasn't the case. They actually led the rally, led the sell-off yesterday. It was the Amazon rollover, the Netflix rollover, and people have been hiding out in these COVID plays. And that trade came off hard yesterday. We talked about Shopify, and for whatever reason, Shopify did not come down. I'm still nervous on Shopify. It didn't make a new high. It tried to come down, didn't. That's good news. But I'm still nervous on that one too. So Amazon, I'd be a seller of the rally in Amazon if I was hiding out there. Netflix, if it rallies here this morning, I probably would be a seller of that rally here too. You get a significant dip on these things, then I'm interested. But let's think about the 50% retracement of the move in Amazon from 2000 up to 2460, call $460, 230 off, 2200, 2220. You got another 100 points, I think it could go down here before I get interested in potentially buying the dip on that one.
Yeah, that's pretty clear here. The low from yesterday, 2306, 2316 low, so 2300. That's a line in the sand, and you're safely away from that, $48. But I'd be keeping a real close eye on 2300 in Amazon. Sorry to interrupt the earnings parade, Spencer. Go ahead.
Well, I was going to ask Dennis, if you would buy the dip in companies like Starbucks here, or anyone that's
Not much of a dip. You know, it's tough because a lot of these have come back. And yes, certain companies I would buy the dip on. Starbucks has really come back a long ways. I mean, you're talking about a stock that's $10 off. It's, you know, it's getting into the vicinity where it's almost got all of its losses back. So yeah, I'm more inclined to buy the dip on, stocks, but I'm looking at stocks that maybe haven't come back as far as Starbucks. I feel like this has come back the whole way. So I'm like, what am I really buying a dip? I'm where the stock was at the end of February. I mean, $90 and you've come from 50. So again, I'm not putting this one in my long-term portfolio. As a trade, maybe I buy the dip, but even on Starbucks, it's just come back too far. So it doesn't fit that description of the trash that's beat up. You know what the trash that's been beat up is like? Hog. HOG. I wanted to go long hog in earnings yesterday. I wanted to go, overnight into it because I was like, you know what, the bar is so low, they probably rip it higher, and it went up significantly yesterday. And obviously the trade's over now, but we were talking about the airlines yesterday, and could they rip out? Could they LUV come back from a disappointing report? Could the airlines start to show life? They did. They're literally just combing around trying to find anything that hasn't went, and they're buying it. I mean, this might be a good segue into Boeing here, because
Sure.
Boeing has not, obviously participated in the rally at all. It reports earnings this morning, and they're garbage. They're garbage earnings. He knew they were going to be garbage. I mean, they miss. The guidance, it says they're trimming 10% of the workforce. They've drawn down on their loan facility. They believe they believe they will be able to obtain sufficient liquidity to fund operations. They're not even confident they have liquidity. I mean, this is an absolute disaster if you were just taking it at face value. Stock's higher. Why? Because there's just fund managers that are just hungry to buy anything. And they're like, okay, that was a kitchen sink quarter. It's only going to get better from here. We're going to buy it. And they're buying it this morning. I'm not chasing Boeing. I think there's a lot of problems. I think they're going to have to do some serious dilution to get the hell out of this mess. So it's one that I'm probably not going to chase. But as a trade right now, I would not be surprised they squeeze them a little bit. It's a description. I mean, it hasn't gone.
You want the numbers here?
Yeah,
Here, I'll give you the numbers. They lost $1.70 last quarter. Estimate was at $1.61 loss. Sales $16.9 billion versus $17.3 billion. Just echoing what Dennis said, they are trimming 10% of their workforce, and said they are drawing down on a loan facility. But yeah, a kitchen sink quarter for sure.
Kitchen sink quarter, but maybe the next quarter is not going to be any good. Q2 is going to be no good either. I mean, they got problems. The airlines got problems. Boeing has major problems. Again, I'm not putting these stocks in my long-term portfolio because I don't need problems in my long-term portfolio. But as trades, the airlines were good yesterday. As trades on Boeing, I'm scared to pay up $5 for it. I think if you had the guts, and I almost did, I was like, I actually took this home long overnight. And I chickened out this morning, was trading up $2 ahead of the report. And I was like, I'm getting the hell out. And I sold it. And, I did dip on the initial report and then run, but I wanted to take it through the report because I thought that is, unless they do some dilution like LUV did, it's probably going to rally on the report. And it did. So here it is, trading up. I don't know what to do with it at this point in time. Coin flip territory.
I'll give a level. And,
yeah, give me something.
Yeah, and I think this is the key to the day, and I'd even give it, maybe the key for the remainder of the week. On what's today? On Monday, you hit 137.57.
Yeah.
You tested that level yesterday, the 137.20. Really backed off, closed $6 off that. So you clear 137.5 here. And yeah, you got room up to 142, but I wonder. That's just a good level for me. If I did have it, like Dennis, if I had took it into a report, I'd be out there. Like even like 137.25. So if they take it through yesterday's high, but they can't quite get it to Monday's, or that would actually be Friday's high. So I really like that level. And another thing supporting that level is you had a close. I'd like to see like a stock on the 23rd, you closed 137.74, open lower, couldn't clear that closing price of 137.74. That's when you had the 37.57 high. So really like that level for you. On the downside, I don't even know what to tell you. If you're shorting this thing, if it gets close to being red on the session, 31.30, I think you may find buyers.
You don't want it to go
level.
red. If you're long this thing, you don't want it to go red. That's what I would say too. But it's going to chop around. It's not an easy trade. I mean,
I have such a hard time following those stocks.
It's hard. I mean, it's moving around 3, 4, 5%, and sometimes an hour. And often earnings reports really going to move around. It's hard to control the risk on something like that. So it's hard to trade.
And it's funny because I look at the daily here and I squint and I'm like, oh man, this thing's been quiet, This thing's just been in a tight range. And then I look, well, yesterday it had a 10-point range. The previous day it had an 8-point range. It's a 10-point range, 7-point range. So it's just because of that bar that you had in March that the daily chart looks so distorted. Yeah. It looks like it's just really just consolidating near the lows of the move, just like you saw in the airlines and the cruise lines, which are starting to perk up a little bit.
Let's go General Electric, because even though the bar is like in the ground and buried for GE, somehow it came in below the bar. It actually, I expected more of a disaster for GE, but I guess you just should expect not, I actually am surprised that GE didn't catch a bit off this. It's down 6% here now. So I don't know. GE is just the dog of all dogs. So give us the numbers, Spencer, and maybe we can break this down.
5-cent EPS versus an 8-cent estimate. Sales of $20.5 billion versus a $20.2 billion estimate. They talked about, reducing the size of GE Capital and, how they're looking for more strategic opportunities out there, and talked about how much cash they have, how much liabilities they have, but yeah, a lot of scary stuff in this report.
When you're talking about how much cash you have and how long you can survive for, these are not the companies I want to put in my long-term portfolio. I've hated GE for I feel like 2 years here now. I hated it at 20, I hated it at 15, I hated it at 10, I hated it at 6.66. Then I had that ridiculous rally to 13. I hated it then too. I still hate it. With that being said, if you're putting it on for a trade, I'd say you stop yourself out the low of the move, which is 590. I don't know. We might even test that today. I think, we've come down far enough. We could test $6 here today. Does it bounce off there the first time? I think it might. I think as a trade, maybe. I'd stop myself out under 590 though. Below 590, I want no part of this.
Down 40 cents on a good volume here in GE. And I mean, this is back where it was during the financial crisis. I mean, it's how they've done changes in the C-suite.
It's such a disaster.
Yeah.
You just think about how good of a company this was back in the year 2000 and, where it is 20 years later. And Jack Welch must just look and just think. And some people say it was Jack Welch's fault that they set him up for failure. I don't believe that, though. It's just been a disaster. Like you look at Honeywell. And Honeywell and GE, yeah. And at one point in time, GE was buying out Honeywell, and then antitrust stopped it. That was back in the year 2003, 2004. And you look at Honeywell, what it's done in the same time period as GE, and it's night and day. I mean, you bring up a 20-year chart of Honeywell and a 20-year chart of GE, and they're in the exact opposite directions. So GE was a problem child before COVID hit. Now it's obviously got more issues due to COVID, maybe not a direct impact from COVID, but everything is impacted by COVID. It's tough. But again, you have a level. So, if you're coming in and buying it at 10, 12 bucks, I mean, you buy it at 637, you're throwing in your long-term account, stop yourself out below 590. It's not that bad a risk reward here, but just from that perspective, because you have something to lean on, but I'm not doing it because I just think that the company could eventually go bust. So I think there's better places.
Does Bob have any of that Honeywell GE spread on still?
He'd be doing really well if he did. So,
because anyway,
he was long Honeywell and short GE. That would have been really good.
That thing blew up, man. There was some pain. There was some pain.
When you're in risk arb and you're doing risk arb and the deal, all of a sudden out of the blue doesn't go through. There's pain for those risk arbs. I guess if you're on the right side of it, there's gains, but usually it's pain. Usually when you're in these risk arb deals, you're looking for the 7-8% on the closure, and then boom, it falls 30%. You're like, ouch, there goes my week, or worse, there goes my month. So, I've traded risk arb for a lot of years. I've had some deals. Remember, I had Allergan blow up on me. when it was getting taken over by Pfizer. I had that one on, but I'm trying to get out and minimize the damage as much as you can. But that happened after hours. And there was nothing in there. There was no liquidity. I'm like trying to work out of it.
Wait, do we got a halt in Gilead?
Yep, I just saw that. I was going to jump in there. Gilead is halted for news pending.
Oh, come on, Gilead. I'm scared. I'm scared. I'm scared.
Dennis, don't be scared. I'm long too.
You're long too. So me and Joel are both long this. Here it comes, the coin flip. We've been talking about the coin flip in Gilead. People were asking me, do you like Gilead? You don't like Gilead? I was like, it's in coin flip territory. Good data on the drug, it's going to rip higher. Bad data on the drug, it's going to go a lot lower. So we'll find out soon. Watch this for the overall market, though. So whatever news comes out here, if that news is good for the drug, that market could rip higher.
Oh, yeah.
If the news is bad. So there's an impact to the overall market on this, too. Very rarely will you see an individual stock the size of Gilead halt and have a significant impact on the overall market. But there will be a significant impact on the overall market. So be careful when we find out what this news is.
And in the street's betting one way here. The street's betting it. It's good news. We had that dip.
It's got to be the drug news. They wouldn't halt the stock unless it was the drug news. So keep an eye. When you guys know in the chat, let us know.
Yeah, we've got that, and we've got GDP coming up at 8:30
Oh yeah, Dennis.
Here, so.
Dennis, you might want to go wide there, buddy.
There's a lot of potential news to get picked off here right now. Is that what you're telling me?
Yes. Yeah. Yeah.
My heart just skipped a beat when you said the Gilead's halt, and I'm like, oh, I knew I was eventually going to go.
That was tremendous. That was a tremendous reaction.
I was like, oh.
Dennis, you don't rattle Dennis too much, but
no, he doesn't get rattled very often.
Well, you know what though? I knew I was intending on going into this news. Like I was like, I'm thinking the numbers are coming from. I was hoping it's going to be good. Well, the market, we don't know anything yet, so there's no news.
I'm telling you right now
yet.
what the market's
I'm watching that news wire.
We don't even know when it's coming out.
It could be all day. It could be halted for a while.
Usually,
like stock like Gilead's going to halt and then release it like within 20 minutes, I would think. So I think they're going to release it soon. So how's the news? This impacts everything. Yeah. Everything. We saw. Okay, so just to put it in perspective, when Gilead had the positive news, originally 2 weeks ago, we had 1,000-point rally in the Dow. Do you remember that, Joe? That's what kicked it off.
Dennis, are you going to pay attention during the
Gilead
GDP
move?
Are you going to pay attention?
Okay, go talk stocks. I'm going to go and do another earnings report. I'm jumping in, or do whatever you want to do.
I'm waiting for GDP. The estimate here is for a 4% decline.
GDP, Gilead. I don't even know what to do. You got me all flustered now.
Right now, the street is totally anticipating good news here out of Gilead. And the worse the GDP is, probably the higher the market will go. So you can give me that headline number. We just pulled back during the early part of the show to mid-range on the session. Got a little bit below that. You're pretty good. I like the GDP. There you go. New high. 2908. We just hit 2909.75, 2914. We have made a new high of the move, folks. We just hit 2918.75. That's a new high for the move. Yesterday's high was in that quadrant. Yesterday's high, 2913.50, back below that number. But they saw the Gilead news. They started buying. I didn't care what the GDP was. They kept buying. What's the number, Spencer?
Yeah, I was going to say, I almost feel like it's secondary now to whatever the Gilead news is. Again, that we don't know when that's coming. GDP, I'm seeing. Well, actually, I don't know what I'm seeing here. My internet kind of just froze up. Is it?
It doesn't make any difference.
Wait. I don't know if it's out yet. What? I'm not. Either it's me, or it's not, or the page isn't uploaded yet. I don't.
Well, CNBC.
Oh, wait. Here we go. We just got a Gilead headline. Gilead.
Yeah.
We see here. I'll read from the pro here. Data from the National Institute of Allergy and Infectious Diseases says we understand that the trial has met its primary endpoint and that the NIAID will provide detailed information at an upcoming briefing.
Data.
Yep, met primary endpoint is the key word there on Gilead. So I don't even see the GDP number out right now. I don't know if it matters, but Gilead is the news is at least out that they met the primary endpoint and will know more at a press conference.
It's big. It's big news. It says 15 points. Okay, so you're saying S&P futures spike 15. So all we know at this time is that it's met its primary endpoint. We don't know details here yet. So
Right.
the devil could be in the details. So don't just automatically assume, we're going to run here. On the initial headline, it looks good, but we don't know all the details here yet. So obviously the market, I believe is spiking a little bit higher because of the Gilead, the GDP numbers, it moved on as well. But this Gilead, information is very important in the market overall too. So
wait, is GDP, I'm seeing up 4.8%. That can't be right.
I don't have it in front of me.
Yeah, they're.
I don't know if it's out yet.
It's out. It's out.
Does it make any difference though?
Does it even the GDP? It's all about Gilead. Like Joel said, the S&P futures started to rally when Gilead got halted, and they were speculating that this is going to potentially be good. So now you got Gilead trading higher. People are going to ask, what am I going to do with my Gilead? If this thing spikes back up to 85, 86, I'm probably going to sell it again. So people haven't been listening to the show, I bought Gilead originally on the idea that the drug could be okay. I bought it at 75 or 74 and change, and I sold it at 85. I rebought the stock on that news which was a funny story. On the bad news, I got hit on a limit at 77. I sold it up almost at 80. I rebought it again in the 76 handle. I am probably going to sell this stock again if it gets up near into the mid 80s.
You're over trading. Dennis, this is your long-term portfolio. You're like a high frequency.
No, this
trader.
is a swing. This is like more. It's one of those. It's one of those that if it goes down, it becomes an investment, Rachel. It's one of those trades that if it goes up, it's a trade. If it goes down, it becomes an investment.
Very good, Dennis. You're really.
The Gilead, I break the rules for. You're never supposed to do that. We always joke, don't let a trade become an investment. I probably wouldn't do that in the case of Gilead. So, okay, I don't know. We'll see. I don't know how much it's going to go up. I would assume it's probably going to go higher on this. I don't know what's going to come out of the halt, but we'll see.
Just to put a bow on the GDP thing, down 4.8% is the reading for Q1. The consensus estimate was down. I saw anywhere from 3.5% to 4%, and it came in down to 4.8%. So a worse than expected reading on the GDP print. There was some scurry with the release on the page, but regardless, like you guys said, it's all about Gilead for now. GDP was the headline until 8:27, and now it's going to be Gilead for the day. So still I have not seen any update as far as when the halt could end. Usually you get that sort of thing from the exchange, but I don't know when the halt's gonna end yet. But
Dennis is talking about when you had that news. This was back on the 17th. It traded close to 90, if I remember, but that was in the pre-market in the after hours. Cooler heads prevailed in the regular session. 85.79 was the high of the move that day. 85.18 was the high the following day, and it kind of withered from there. So if you're, if you're going to take the Dennis stance here, the $85 area looks area of interest. For me, I'm just holding it. I'm gonna hold it, and then Dana and Emily are gonna have that.
I'll be trading it. This is more a trade for me, so I will definitely be trading it.
And then when it's 100,
in all likelihood, if this thing get up in the upper 80s, I'm gonna be selling it. So
and then when it's 105, you'll be like, oh, I need to rebuy it at 90. I can hear it now.
You got me figured out, Joel.
All right, I'm going to pivot away from this discussion for a quick second here. And I want to bring on our guest, Patrick Haan. He is the head of petroleum analysis at gasbuddy.com. And I do wonder, if that move there, I didn't look at oil, but I'm sure it moved off it as it moves off the broader macro movements here. I'll bring Patrick on now. Let's see if Zoom will let me talk to him. There we go. Patrick, good morning. Can you hear me? Let's see. Good morning.
Well, are you there now?
Yes. Oh, you're sideways though.
Oh, well, let me fix that. We're kind of working from home and trying to get our setups all figured out. So
hey, look at that.
Let's get the camera to figure it out.
We got him. All right.
using
Nice, I
my
love this setup.
technology here. You're changing the screen. So, little background on Patrick here. We had it was a few years ago we had you on, right, Patrick? When we did an oil special during one of the oil crises, and we haven't talked to you about in a while. But man, with everything that's heating up in these markets, with the oil market, you're on the guest doc. I said I got to get a hold of Patrick. Patrick, tell us what you did. And do we have some bad news on Netflix here? Just while Patrick's answering that, Patrick, what have you been doing? Tell us about GasBuddy.com.
Well, of course, Gas Buddy is the free app that everyone uses to find the cheapest gas prices in their neighborhood. And though a lot of people have been staying home, we've seen incredible increase in our traffic counts, which is quite interesting. We're all kind of eagerly looking for these cheap and low prices that we haven't seen in some cases since 2003. But that's what our free app does. It points motorists and it helps them fill up for a lower price. We also have a free pay card that links to your checking account that saves you up to 25 cents a gallon. And with that card, there's some really interesting demand insights that we've been able to see now.
So
wait, such as what?
Well, gasoline demand in near real time. Some of the metrics that the government uses, the EIA uses, are very sought after, but they're often delayed. It's product supplied. It's not necessarily demand. So we're starting to have a insight into one of these most coveted metrics, which is real-time gasoline demand.
So what do you think's driving this? I mean, you can only put so much gas in your tank and load up, and people aren't supposed to be going anywhere. What do you think? Is it, truckers moving food supplies? Where do you think this increase in demand is coming from?
Well, I mean, it was an increase for distillate, but let's put it out there. It's been an increase from the low. We aren't looking at an overall increase in demand. I mean, we're still talking about demand that's probably 35 to 45% lower than where it was in February. And keep in mind, this isn't even seasonally adjusted. So demand in February is usually consistently weak. For the first week of this situation, perhaps back in March, we did see a pretty noticeable upswing in distillate demand, perhaps being driven by semis trying to replenish your groceries, all the toilet paper that was made a run on. But now we've seen distillate demand fall. So along with gasoline, now we're in a situation where because of the rebound, distillate inventories have actually been surging, and gasoline inventories. The API reported yesterday that gasoline inventories actually dropped 1 million barrels in the last week. So refineries made some huge cutbacks, and perhaps they cut a little bit too much off gasoline production. They're going to have to tinker with it a little bit further.
So it feels like, when oil goes up and way up and has these valleys, then gas goes up with it. But when oil declines and goes down, it seems like it doesn't go down as much. Is that just selective perception on my part, or is there some statistical, analysis behind that?
Well, I think it's both. First of all, it feels like that because everyone's watching the price of oil, right? And that's the metric for gauging where prices are going. Oil prices plunged. The unique situation that we're in, though, is that gas prices have plunged, but demand has plunged in some cases upwards of 50%. So gas stations are kind of reluctant to lower their prices too quickly. Effectively doing so would shoot themselves in the foot. Basically, they're trying to get by maybe having a double or triple margin than they're used to, but that's to offset the huge drop in demand. So there is some truth behind that. But I also think that motorists are watching the price of oil, and the price of oil and gasoline often move in parallel, but it is certainly not a direct 100% relationship that's consistent every day of the week.
Ron, with Patrick Haan, who's the head of petroleum analysis at GasBuddy.com. So, Patrick, what do you make of the state of demand right now? And I guess another way of putting that would be, talk to us about what kind of rebound we could see.
Well, it's been really interesting. I think some of the data that we look at on a day-to-day basis has me looking at our demand data a little differently. And that's that Friday is the strongest day of the week for people to fill their tank, and probably because it's payday for millions of Americans to fill their tank. And what we've seen the last few Fridays, last Friday was actually the weakest Friday for gasoline demand since this whole coronavirus situation started. And what that is telling us is that there's obviously, with the jobless numbers, there's millions of Americans that aren't filling their tanks. So that's a new worry. But we have seen a modest uptick in demand from Lowe's. Tuesday's demand was a little bit higher than last week, but keep in mind, demand is still very low, though I think it has hit a bottom.
Yeah, it almost feels like a waste. I haven't filled up my tank in, gosh, I don't know, 6 weeks. It almost feels like a waste of just not being able to go outside and take advantage of ridiculously cheap prices at the pump. Are you seeing anything as far as like, I don't know if you look at individual companies and how they're performing and how they're holding up as far as these wacky supply and demand trends kind of play out in real time. Are you seeing anything from individual companies that you can provide some color on?
I mean, right now, so much of the industry is segmented, depending on if you're downstream or upstream, you're doing better or worse. And I think the retailers are kind of holding on for dear life. But keep in mind, a lot of the retail companies like Marathon Petroleum, which owns Speedway, margins are still relatively good across the board. For the retail level, it's the refiners, it's the upstream operators, the oil producers that are getting hit the hardest. So, traditionally, it's as you get closer to the wellhead, the better you're doing. But now it's the opposite, into a complete reversal, which is, defies conventional wisdom, that retailers usually have the smallest operating margin. But some of your companies, Couche-Tard, like I said, Marathon Petroleum, that have retail holdings, margins are fairly substantial right now. Though as the national average falls, those margins are getting eaten into. And keep in mind, on the rebound, if demand does recover, we are starting to see wholesale prices recover. That's going to squeeze those retail operators then a little bit more.
I don't know if we've ever actually defined that. Can you explain upstream, midstream, downstream for our audience?
Well, upstream, simply at the wellhead, closer to the source of that oil coming out of the ground. So your oil producers are all upstream. Midstream, you're talking refineries in midstream, downstream, retail level. And so that's the importance here, is that usually the upstream is one of the stronger performers as long as the price of oil is doing well, where usually downstream, the further you get downstream, the smaller margins tend to be. So right now, like I said, it's the inverse, and that the further downstream you go, the better margins are.
Patrick Haan of GasBuddy.com joins us here on Benzinga's Pre-Market Prep Show. I just want to get your reaction. Was it last week or the week before when that May contract went off the board, went negative 46? And I realized, saw some news that it could go negative here. Now they're only allowing the June contract for liquidation only. Could you kind of give us your thoughts when you actually saw oil go negative to a barrel? And do you think like the CME is just kind of monkeying with the rules here on the contracts, and in order to keep the oil market afloat?
Well, the CME is grappling with its own challenges in WTI versus ICE's Brent. So, okay, they're probably struggling to keep their benchmark afloat. I mean, it doesn't look great when your benchmark index goes negative. So what we're running into with the extreme volatility in WTI is simply storage moves. That is, nobody really knows when we're going to hit the tank tops in Cushing. Now, this morning, we've been hearing so much about storage running out of space. You can't find it. It's all fully allotted. But now this morning, there are some chatter that perhaps we're not there. And that's why WTI this morning is posting a really strong morning. Last I checked here, we're up another $2.50, $3 a barrel this morning. So this is all really a storage play. And we will likely see oil prices recover so long as there's room to put it. And I think we're seeing a lot of cutbacks in West Texas. The Permian Basin drills are going offline in rapid fashion. And that's acting as a floor to what you're seeing in WTI. And I almost wonder, there's been talk, will May rehappen in June? Will June go negative? And we're right in the midst of states starting to reopen. And it really depends too. Now, refineries are the primary source for that crude oil. And if refineries start ramping back up to meet an increase in demand from these states that are coming back online, that will create a further floor on the price of oil. So, whether or not we get to see a June contract negative really is contingent on some of the biggest gasoline consuming states getting back online. Watch Texas, California, and Florida for any signs of reopening. Those are the biggest gasoline consumers. But part of me wonders if we have hit a bottom with WTI and perhaps we start rallying from here.
Patrick, what about these tankers here, like Nordic American and others that have just caught huge bids these past couple of days?
Yeah, I mean, this is the most popular place to throw oil right now. You have so many.
It's the only place.
Yeah, really. Talk about that. It's certainly with dozens of tankers sitting off the California coast. This is a market. I mean, this talk about volatility. One day it's going to be that rates are through the roof on oil storage, and the next it's going to be, if we get back to it, that they've run out of room or whatnot. But that certainly is a very interesting dynamic as you see so many millions of barrels now essentially being stored at sea. That's the easiest, quickest way to store oil that you're acquiring at far lower prices. So theoretically you're probably seeing some firms that are putting scrap plans on hold because there's a tremendous interest in even the oldest carriers right now.
One more before I let you go here. And man, I lost my train of thought here. Oh, I want to talk to you just on a regional basis here. I mean, you're obviously dealing with oil companies. I mean, I know Texas is reported to be reopening soon here. I mean, measuring the impact of the different states and regions. I mean, do we need a quick turnaround, or we're going to put a serious hurt on the Texas economy, or are they in a cash position, these companies, to sustain it? I mean, cities like Houston, where everyone works at the refineries, everyone's an executive there. Just talk about the regional aspects.
Yeah, there's a lot to be said. There was a report out yesterday of the amount of domestic violence and suicide rising in Houston. You look at tumultuous times for the oil industry, and it certainly is trickling down to these localities. These oil producing states are getting hit hard. And it's not just the oil producing states that are hurting. I mean, all states are hurting right now based on gas tax revenue that's been lost. I believe Connecticut already laid off Department of Transportation workers because of the loss in gas tax revenue, and it won't be the only state to do so. And that's kind of the other story here, is that we're missing out on tremendous tax revenue as a result of the slowdown in oil production. So, I think some of the oil producing states are certainly hoping for a quick turnaround, but, it's not really up to them so much. It's really up to the economics of oil, which, at this point, at $14.40 a barrel, things are still not looking terrific.
Patrick Haan is the head of petroleum analysis at gasbuddy.com. Patrick, thanks for the time, and be safe out there.
Good to be with you guys this morning. Take care.
Thanks, Patrick. We'll get you on again soon.
Okay, so because of that Gilead headline, first of all, Gilead is set to resume trading at 9 o'clock, but every quote-unquote COVID stock is just sold off on that headline. Netflix, Shopify.
Yeah. There you go.
Yeah, so I want to read a couple of headlines here from this Gilead release. They said that phase 3 trial of remdesivir showed patients receiving a 10-day treatment course achieved similar improvement in clinical status versus those taking a 5-day treatment course. They also said patients who received that 10-day course had improved outcomes compared with those treated after more than 10 days of symptoms. Pooled data shows day 14 discharge rates of 62% versus 49% discharge rates of delayed treatment. So good news here. The stock is set to resume trading at 9 o'clock, and every quote unquote like COVID stock or stock that's been hot just sold off on that headline.
Yeah, like, and you were looking for news on Netflix. I believe Spencer's
That's
right.
it.
It's
Yep,
the lockdown. So we talked about Netflix and Amazon both. I was talking about Amazon just 20 minutes ago, saying it was trading $23.50. And I'm like, the market stays up, don't expect Amazon to hold up with FANG, because this has been a hiding place for COVID. So you're seeing that trade come off. Amazon's only up 16 points here now. So it is still up, but it's given back 22 points since the Gilead news here. I mean, it's very important for the overall market. And this doesn't sound like it's the end, result here. Again, we're just getting data here. But think about, your biotechs that hold a lot of Gilead. IBB, 8.9% of Gilead, and they're actively trading here right now, is in IBB. IBB is trading up 3.3% right now. So it's trading up because, and you can look at the other biotech stocks. I'm sure they're up too with the overall market, but, they're speculating that Gilead's going to have a move here. BBH has not made a trade yet, so it's too thin. And then BIB is twice the biotech. It's trading up 6.5%, so it just trades off IBB. But IBB is your best gauge. It's trading up $4 right now, 3.3%, and it owns 9% of Gilead. So they're speculating a pretty decent move to the upside in Gilead at this time. So we'll see. I will probably be selling into this move. I've actually already placed my order out there. We'll see how high it goes. I hope for a really high open.
Here, I'm just going to list off a few more ETFs that have a high exposure to Gilead. So IBB, 9% of the fund is Gilead. You mentioned BBH, Dennis. DVP has 8% in Gilead. PBE has 5%.
Some of these are smaller, so just be careful. IBB is very liquid.
These aren't
Some of the PBE is thin.
Yes.
Yeah. Stay away from the thin ones.
These are thin, but I'm just saying for exposure purposes, DVP is high, PBE and IEIH all have high exposure to Gilead. So just a few more to keep on your radar.
IBB is the one you got to watch. So this is going to move around with Gilead there. It's 9% of the index. So we'll see what the move is. It had a good move last time. It had some positive data. So let's just see what happens here again. But it's going to be interesting.
Wow. Okay, that threw a big hurdle into the morning here.
Fun show, huh?
Yeah, but you want to get to some more earnings? We didn't get to AMD yet. We didn't get to Spotify yet. There was a lot more.
Let's talk AMD, because this is a widely traded stock, a widely loved stock. It's a stock that got back its entire loss from February. So that's one thing to consider. You're like, oh, I'm going to buy AMD. Well, you're not buying something on the cheap. Even though the earnings, you're getting an earnings dip, this isn't like one of those that was on the cheap, and you're buying something back where it was before this whole thing started. So AMD is not relatively cheap to where it was. It's all the way back. Again, there's a reason for that. It's quality. NVIDIA is the same thing. I mean, it's quality. NVIDIA had a huge dip yesterday. It's actually trading higher with the overall market, but AMD down. I don't know. I traded a little bit last night. I have no position in AMD here right now. I can't, this isn't a dip I'm looking to buy because the stock's just been too strong going into it.
The earnings were fine. EPS was in line. Sales beat by a hair, 1.79 versus $1.78 billion. They did give guidance. They gave some Q2 sales guidance, and that came in, or the estimate for that was at the high end of the range that they gave. So their guidance for Q2 sales was mostly lower than the estimate at $1.92 billion.
Still trying to figure out whether the Lisa Su that's president there was the same.
Joel,
Lisa
give
Su.
that up. Give that up. Give it up.
He's a creature of habit.
Oh my gosh.
If she's listening, I wasn't really nice to her, so I can understand.
It is not the same person.
I don't think Lisa Su. She might be listening. I don't think she is, though.
You don't think she is?
Not the same person, Joel.
Well, if anybody knows her, could they please reach out to her and let her know that I want her to be a guest, and I'll apologize.
We should bring Lisa Su. We could get some big guests. This Jason Raznick got pulled. We just had CEO on. I mean, we get guests. We get big guests.
All right, back to AMD here.
Wow. Someone backed up the truck at 52.40, and they said, I want to own it, and they did.
They got down to 52.40, eh?
Yeah.
Yeah, that's a long ways down.
No, not 52.48, 52.40.
52.40.
A.
Haha.
And then you had a rebound, nice rebound, 54.80, and you're just hanging up here. So this is a tough call. I'd say above 54.80. Let's get through the low from yesterday and the close. I'd be really interested to see what happens at 55.51. That was your close from yesterday near the low. If you get them rally, if this thing just decided to say, hey, I want to go with the market, 58. You did hit 58 2 days ago. 58.63 was a high on April 20th. Another high at 58.08. I think you guys get the where I'm going at this. All-time high, though, 59.27. All-time closing high, 58.90. Important for this, though, to get through 55.5 to close from yesterday. S&Ps just blasting off here.
Waiting for Gilead.
Yeah.
The opening, I have opening indications on Gilead here. It's bouncing around, it's moving around. It's 86.82 right now is the opening indication. That is changing continuously here right now. So so obviously bouncing around a lot here. So we'll see.
All right. There we go. 29.20. So just bursting here into the opening bell. Google, we did cover Google. GOOG with the L, I'm not following, but the regular GOOG up $101.33 at 13.35. Look for follow through the pre-market high. The old resistance, new support there, 1300 for Google. That was the top of the range that it had like last 4 or 5 sessions. So there's what I'm looking at in GOOG without the L.
Let's do. I was going to do Spotify on this. There was another one you wanted to go to.
Yeah, no, actually, I was looking at Spotify and MasterCard.
Right, MasterCard. Okay, we're doing both. Spotify first. EPS, they lost 22 cents a share versus a 49-cent loss estimate. Sales of $2.03 billion versus $1.86 billion. So beat and beat for Spotify as far as the EPS and sales. They said they had 130 million premium subscribers at the end of the quarter. That's up 31% on a year-over-year basis.
Nice pop.
Yep.
Again, you're buying a stock that was
Spotify.
where it was in February. So I have trouble buying these stocks at these prices. So, you know, when I was looking at buying dips, I'm looking at stuff that hasn't got all of its losses back. So I know you're getting a rip here today. So I'm definitely not buying rips. I don't buy rips. So I'm no trade on this.
We're on
No
Spotify.
True.
My wife has Spotify too. I think she pays for it too, actually.
Pre-market preps on
There's
Spotify.
a free version and then there's a paid version. I believe my wife pays for it. So I should look
I
into
believe
that.
Agnes, that's in the chat in the morning and the afternoon, found us on Spotify. But your
Prep.
pre-market prep on Spotify. 153.99. Really not far off that level. That's a pre-market high. So looking for some continuation through that level. 155. Some sellers hung out here back before the market crashed. I see 3-4 highs in that area. So see what happens if the rally continues at 155. Above that, things open up to 160 if you're really looking for a juicy target. January 8th and 9th highs, 159.48 and 59.98. I have absolutely no idea where to buy this on a pullback.
All right, and then MasterCard, they beat and beat on the top and the bottom line.
Okay, let's see.
We're getting the open here in 20 seconds. 86.48 is the projected open now. It is really bouncing around.
And you're out there, Dennis. You're going to fade it.
I'm out there. Oh, yeah, I'm out there.
You're out there at 85.
I'm not telling you where my order is, but I'm out there. And if it opens too high, we'll be selling the opening tick. So We'll see. 4, 3, 2, 1.
Whoa, there we go. 86.48.
Wait, 85. So it's trying.
Well, it opened, and then it opened low, actually, and is sprinting here.
It's trying.
Above those highs, GILD, I think that you got an 83 print in there. So if you were so inclined to buy that,
I just sold it, I think. I was 86.90.
You think? You don't even know?
Well, if it executed. I had it at 86.90 was where my order was.
Why did you go at that level?
I don't know. I don't know. Because the opening indication was like 87, so I wanted to be under that opening indication. So hopefully I sold it.
I'm sure
these retail brokers sometimes are like, you know, it's interesting. Sometimes they don't execute. So I hope I sold it because it's actually way down. Maybe I should rebuy it right away.
Oh, Dennis, would you stop with this? Pretty good call there. It hit 87.40.
86.90 is where my order was. So
you
let's
should
see.
be done.
Yeah, I'm done. I got filled. I just verified.
Okay.
I had to go and log into my retail brokerage account because it's my longer term account, and I was filled. I was filled at 8. I don't even see what the time is. These retail brokers that came and follow how they work. I place like one order in there a week. 86.90. It is filled, so I'm out. So should I rebuy at 84? I scalped 2 points. I'll get my order back out there at 77 again. Anyways, it was fun.
Yeah, that was an interesting trade there. Okay, I want to wrap it up here. Thanks to our guest Patrick Haan, and thanks to everyone who joined us in our chats on YouTube and on premarket.benzinga.com. You can always catch a replay of this or a podcast. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Joel and I will be back with you at 3:40. Until then, everyone have a great rest of your day, and wherever you are, be safe.